An interesting illustration of this was provided again by Warren Buffett, who pointed out that during his years at the helm of Berkshire, something like 50 of them, that 4 or 5 times during his period, that the share price had declined by 50% or more in an 18-month time frame. If you look at a stock chart of Berkshire Hathaway going back to 1966 until today, you can't see those declines. You literally can't see those declines. I proceed under the assumption that sometime in the next 5 years, some event, liquidity squeeze, recession, whatever, will occur, and it will take equity markets down by between 30 and 50%. Now, I have two choices. I can stay out of the market, or I can maintain enough liquidity and have a high enough quality portfolio that my portfolio A will come back, and B, I can use my liquidity to buy other people's mistakes. For people who use the fear of recession as an excuse to stay out of the market, those people will consign themselves to performance mediocrity over time. A recession or some form of setback is an inevitability. If you are going to try to get ahead, there is absolutely no way that you can get ahead without accepting those periodic risks. Bernard Baruch, I think, boy, I'm full of quotes this morning. Bernard Baruch once said that the only guy who ever bought at the bottom and sold at the top was a liar. It didn't happen. Well, first of all, I no longer invest outside of natural resources and conventional financial services. There's all kinds of cool sounding stuff out there, but I don't know how to know it's true. And there is enough opportunity for me in subjects that I have 50 years of experience in that I don't find it necessary to relearn the lessons that I learned by making mistakes in resources and conventional financial services in the first 10 years of my career. And I would suggest that that's what Buffett says. What Buffett says is if he doesn't understand it, he doesn't want to do it. He points out that he's made enough mistakes and stuff he understands that there's no particular need to go outside of his circle of competence and find ways to make new mistakes. His methodology is very much finding fairly dominant businesses that have good margins, can use leverage, but employ it only modestly so that they can lever up their balance sheet in bad markets and expand. And companies who are tax efficient to the extent that they return capital to shareholders via share buybacks as opposed to dividends. That's a wonderful strategy. There are people who point out that other people have got richer quicker. What they don't point out is that those people who got richer have not given over half their net worth to philanthropy yet. Buffett's third in the list because he's given away half his net worth. And what he has been able to do has entailed substantially less risk than what the other guys have done. It is important not just to look at who made the most money, because if you're trying to apply that to yourself, all of these guys are smarter than we are, and they all work harder than we are. What's important to me is risk-adjusted returns. And in terms of risk-adjusted return, because Buffett eschewed risk, the returns that he's generated on a risk-weighted basis are way better than the other guys. I mean, there's no comparison. Buffett has also said he doesn't need gold. And I think that's a much more important statement. If you look back to the decade of the 1970s, when gold, of course, did extraordinarily well, what Buffett pointed out was that high-quality companies that had operating leverage, that could increase their prices, that were price makers, not price takers, were great hedges against inflation. Companies that had to invest a whole bunch of money in property, plant, and equipment were stymied by inflation, but companies that had already established those positions weren't. I guess what I'm trying to say is Buffett is smarter than I am, so he doesn't need gold. I'm not as smart as Buffett, so I need gold. And he tells you very, very, very clearly how he does what he does. And much more importantly, he describes in gruesome detail his mistakes. As an example, his forays into airlines. Having seen that, would I have identified Coca-Cola as an investment at the time he did it? Would I have been as sophisticated as Warren Buffett was and as able to utilize the methodology that he utilizes to achieve the same results? Probably not. Probably not. That's why I've chosen to stick to industries that I know very, very, very well. After 50 years in the business, I understand what makes a good oil company, either a major producer or an explorer. I understand what makes a good mining company. I understand how the timberland cycle works. I understand how some farmland cycles work. I understand community banking. I understand the insurance business. Within my own circle of competence, there is more opportunity than I will possibly be able to access for the rest of my life. So my temptation to go into stocks that would require a knowledge of popular culture, let's say communication stocks, or technology stocks, or cryptos. I hope people make trillions there. I have no fear of missing out, and I have no envy of other people's success. I want to make reasonable amounts of money for the rest of my life. By the way, my wife and I, second to die, will basically give away our entire estate to philanthropy. So I'm doing this to give away more, not to live better. But the truth is, there's all the opportunity I need within my circle of competence. For most of the world, they can't spell gold. It's important to us, but you and I live in an echo chamber, a golden echo chamber to be sure. But we live in an echo chamber. The market share of precious metals and precious metals related assets relative to other savings and investment asset classes worldwide is about 1%. In the US, it's only 1/2 of 1%. In terms of most people's psyche, gold isn't even a floating abstraction. They don't know that it exists. And that's part of the opportunity, because the second part of your question, I think, the answer to that is yes. Gold has done well during periods of time when there was uncertainty around fiat-denominated savings instruments. Obviously, I believe that time is nigh. The 4-decade mean market share of gold in the U.S. is 2%, as opposed to 1/2 of 1% now. If the market's fascination for gold merely returned to the 4-decade mean, demand for precious metals and precious metals related assets would quadruple. And that's precisely what I think is going to happen. I suspect that the whole world would be better were it more multipolar. I think that the Europeans need to address their own house before they address us. I also believe that the US dollar will continue to be the world's reserve currency for my lifetime. For the record, I'm a very healthy 71-year-old. I think that US hegemony will become increasingly challenged, which is to say that I think with regards to stores of value and mediums of exchange, that the dollar will have rivals, gold being among them. I think even within Europe that European peoples are becoming disenchanted with the forced level of government in Brussels, superseding the national government, regional government, and local governments. And so it isn't so much Europe becoming disenchanted with the United States, although I think that's in the offing. I think Europe is becoming increasingly disenchanted with Europe, or at least with regards to Brussels. And I think that Europeans likely and should look for multilateral relationships with the world. If the question goes specifically to Russia, I think that there is some sympathy for Russia among some European intellectuals. I think what you'll find is that the frontline states, as I recall, you're partly Ukrainian, have a deep distrust for Russia, which is to say Latvia, Estonia, Lithuania, the people in Belarus, if not the leaders, certainly the Poles, the Czechs, the Slovaks. It may be that countries that have less exposure to Russia fear it less. But those countries that have exposure to Russia, perhaps like those countries that have exposure to the United States, can and do fear it more.